Hey guys, welcome to the channel Market Uncharted. Today we are going to discuss the diversification of your portfolio and why it's so important for an investor to look around, see all the asset classes, understand your risk profile and how to diversify in order to make some money in the financial markets. So first of all, let's see what a portfolio diversification is, what a multi-asset portfolio can be, and how can we try to make some money in the market looking for different industries, different types of investments. Don't try to put your eggs in one basket only. And this is important here. On the graph, you see a multi-asset portfolio going from real estate to commodities to bonds to many types of US and other countries in the world stocks. This is really important to diversify as much as possible. And you need to understand also what does that mean, the diversification to different asset classes, why this is important for you. And you can see here so many ideas. You can go again for derivatives as well, real estate, physical real estate, or actually REITs, which is exposure to real estate investments trust, but not actually holding the asset. All of this you need to investigate, study to understand if it makes sense for you to create a portfolio allocation with all of these assets. But also important is to understand the correlations, because sometimes if we don't understand it, we might incur on double exposure. And here we have a few ideas on how to understand the correlations around the world and why they are important. And for example, if I go long in platinum and I go long in the British pound through a forex, it can be, for example, a British pound dollar. If I go long in both assets, I need to understand, although I'm diversifying in two types of assets, I'm actually trying to do the same. So if the platinum price goes up, the British pound goes up, I'm okay. But if something goes down, we have a correction in platinum, we most likely will have a correction on the price of the British pounds. I may lose twice. So this is to understand the high correlations that exist in different types of assets are important for us to know. Here again, the Canadian dollar with the price of the Brent crude or the crude oil, the Swiss franc with gold, and understand why this is happening. For example, 25% of Switzerland's reserves are backed by gold. So that's why when the price of gold goes up, the Swiss franc goes stronger, gets stronger against, for example, dollar, euro, whatever. This is important for you to understand. All of these correlations must be studied when you are investing in a portfolio. Again, the Norwegian crown versus the Swedish crown, they go because they are highly correlated. Here in the graph you can see when one goes up, the other goes up as well. Positive correlations. You need to always keep studying these asset correlations. When you are trying to diversifying, and for some reason, if you don't feel comfortable, for example, I want to invest in several banking industry companies, but I don't know, I don't feel comfortable, I can go with the ETF of the financials. And here I present the 11 ETFs covering every sector of the market, because if you don't feel comfortable in selecting each and every company, study their financials, you can pick one of the ETFs and you are comfortable because you are covering the entire market. But again, if you are covering the entire market, you are exposed in one market only. You always need to see the whole world. Exposed to different type of assets around the world is really crucial on a correct asset allocation portfolio. And let's give just a few examples. Now going to shares. If I compose my entire portfolio in Tesla, then I'm not diversified at all. I think it makes sense. If Tesla goes up, my portfolio is going really up, I'm really exposed, I'm happy. But if Tesla goes down for some reason, then something might go wrong because I'm fully exposed in one company only. All my risk is one egg only. Then, for example, I can buy 3 stocks on the same sector, which is good. I'm diversifying, but don't forget, you are a single sector diversification. Again, this has happened actually in this year. When Tesla did its all-time high, start crashing down $400 from the high of $900 to the low of $500, it brought down the entire sector. It brought down the entire market. Then you had the chip shortage that some of the delayed some of the production of these companies. Then it put a really heavy impact on the entire sector. So again, you can be diversified because you bought 3 shares, but if you are only in one sector, you are still not doing a good job in diversification. Then this is a good idea. This is a multi-sector diversification across all sectors. I can be in EVs, I can be in airlines, and I can be in the gaming sector. Here I'm exposing myself different sectors. Again, I say, if I'm exposing myself in different sectors, but I stay in the same country, then you have the country risk. Then you have the currency risk. So this is something really important to understand, but just for you to have a few ideas. Overall, what I'm trying to say is really simple. Sector diversification, company size diversification, asset class diversification, and geographic diversification. This is something when you are creating your own asset portfolio, you need to understand this difference and you need to study this difference. Going a little bit on the company size diversification, also understand if you are investing in a growth stock, value stock, if it's a blue chip or dividend, inside the same size you can make these differences. And this is important for your cash flow. If I want to go to the dividends, I receive a monthly dividend or a quarter dividend. Or if I'm not expecting dividends at all, I just want to bet on growth, so I buy Tesla, Netflix, Facebook, which don't pay dividends, but I'm expecting higher growth across the years. Again, large capitalizations, mid capitalizations, small, and then the sectors. You can see here, just again, not financial advisor, but look at some of these companies, do your own research, and try to, in the end, reach something like this. A well-diversified portfolio across all sectors, across all geographics, across all the world, and you can then split by commodities, real estate, cryptocurrencies, high dividend yield stocks, growth stocks, index funds, and you can cover the entire world and be happy about your portfolio. So thank you guys so much for watching this video. I hope you like it. Don't forget, knowledge is not power, knowledge is potential power, execution is everything. It's important to always do your own research. Please subscribe our channel for more content and press the like button so the YouTube algorithm share with more people. And don't forget, just like the markets, we will not